Stocks slide with midcaps leading the fall ahead of the imposition of US tariffs on Canada, Mexico and China tomorrow. Energy, industrials and realty are the big losers, even as IT ekes out some green after a big drubbing on Friday.
Ultratech tells analysts that it plans no diversification beyond the cables and wires foray, and it will not disrupt the sector but eyes a higher return on capital. It also sees the synergistic move supporting its core business.
Hyundai, Maruti Suzuki, Tata Motors, Bajaj Auto and Hero MotoCorp report disappointing sales numbers for February, but M&M, Eicher Motors and TVS Motors shine.
Veteran investor Motilal Oswal's Ramdev Agrawal says that the market is close to a bottom with valuations near the 10-year average and key indicators turning positive. He also adds that the earnings picture remains intact.
Bitcoin reverses to surge past $95,000 after US President Donald Trump announces the establishment of a US strategic crypto reserve. Crypto assets of Ripple, Solana and Cardano have been included in the reserve.
You're with us here on Halftime Report from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Fatakia. With me as always is Manglam Malu. Well, we were hoping to start off in the green as we did, but then again, it's a familiar story that has been playing out on the markets. We are almost turned into the red now, and significantly, almost breaking below that mark of 22,000 on the index. That is where the index is currently placed at. The picture for the broader markets is equally grim after the drubbing last week. But we'll get to the markets in just a bit. We'll get to corporate conversations first up. And Biocon is the company in focus, as the company launched multiple drugs in the UK and the US last week. It launched liraglutide, Biocon for diabetes, and Biolide for chronic weight management in the UK, and Yesintek biosimilar, which is used to treat several diseases, including psoriasis and arthritis. To discuss this and more, we are being joined by Siddharth Mittal, the MD and CEO of Biocon. Siddharth, good afternoon. Thank you for joining in. We'll get to the drug launches as well, but first up, the most recent one that you've launched in the UK, which is liraglutide. Now, what's the market size here? What is the kind of revenue potential that you are anticipating in the current quarter, which is the fourth quarter of 25, and in FY26? And what is the timeline that you're expecting in the US? Because this weight loss drug has been spoken about quite a bit all through in the recent past.
So thanks and good afternoon. I think this is a very important launch for us in the UK market. You look at the overall UK market opportunity for GLP-1, it's roughly $350 million, which is represented by liraglutide, semaglutide, and tirzepatide. However, the liraglutide on a standalone level is only $20 million in innovator sales. Now, this drug used to be above $100 million in 23 calendar, but because of shortage of product available in the market and some of the patients moving to semaglutide in 24, the opportunity has gone down. But of course, these are numbers which are represented by innovator sales. Now, where I see an opportunity for a company like us is to provide wider access to many, many patients who could not afford this drug earlier. Today, if you look at GLP-1s, is used to treat diabetes as well as obesity. And in most markets, what reimbursement, whether it's insurance or government reimburses, is for diabetes and not for weight loss. And a large part of sales of GLP-1s is represented by an obesity indication. And today, these are out-of-pocket drugs. And when an affordable version is available, that's where we see a huge opportunity to providing wider access to patients. So it'll be difficult for us to indicate that what that opportunity would be. But nonetheless, I think what is more important is this is the first market where Biocon is bringing such an complex drug. And soon in FY26, we will be launching this drug in Europe. We had recently received approval from European Medicines Agency, and we have started receiving approvals from each of the European nation, and we will be launching this along with our partner Zentiva in FY26.
So, yeah, go ahead.
So I think you also asked a question around US. I think US, of course, is a large market for liraglutide and overall peptides. It's roughly $1 billion in sales for liraglutide. And we have already filed the drug with FDA. Our drug master file has been cleared by the FDA, and we are expecting to hear back from the FDA in middle of this calendar year. And we expect to launch in the US in the second part of this calendar year.
Second part of this calendar year. You know, just, the market opportunity is anyone's guess for both your Yesintek and liraglutide itself. But Yesintek likely to go into Europe, liraglutide likely to grow into US sometime the second half of this calendar year itself. When does this start reflecting in your own revenues, for the initial launches that you've done? And from a scalability standpoint, what do you see as a quarterly run rate coming, particularly from, or rather specifically from these two drugs itself? If you could give us some numbers, roughly, if you could, maybe $100, $200 million, what can one expect from a quarterly run rate perspective?
It'll be difficult for me to quantify the numbers, what it would mean for us in FY26. But FY25, of course, we would be supplying the product initial launch quantities, both in the retail and the tender market, and also to our partners Zentiva, which will be reflected in our fourth quarter revenues. It's not going to make a significant difference because, as I mentioned, the liraglutide sales in UK is relatively smaller compared to the European or the US sales. So we will see some impact, but the bigger impact, of course, is going to come in the next fiscal. And next fiscal in the generics business, I expect a growth of mid to high teens. And a large part of that growth is going to be contributed by liraglutide launch in these markets.
All right. And what? Okay, mid-teens out there. I also wanted to touch upon some other launches. You had aflibercept, if I'm pronouncing it correctly. There is bevacizumab as well. But more specifically and most importantly, Aspart as well. Most on the street were expecting, for you to be having exclusivity on Aspart, but that's not happened because Sanofi has recently launched its biosimilar. Is there a similar risk for all your other launches and the above two that we mentioned?
Well, the competition is always going to be there. I mean, let me start with bevacizumab. We've, of course, got the facility cleared with the FDA, and we are hoping to receive an approval from FDA for bevacizumab in the coming months. And we will launch that subsequent to the approval. But there are already 5 or 6 biosimilar bevacizumab already in the US. So we will enter in as a 6th or 7th company. So the pricing is already kind of adjusted with so many biosimilar players available. So I think you'll have to really contextualize that we have to expect competition. We cannot expect that we'll be the only one. Same is the case with Aspart. I mean, as you rightly mentioned, Sanofi did receive an approval for Aspart. Now we have to see what that approval means. I mean, Sanofi, how serious are they about the launch? What's the launch strategy? We have not seen Sanofi, who already has an approval in Europe and who's launched in Europe, to make a big impact in terms of market share. So how strategic is the US market for Sanofi in terms of the diabetes place? Something that they'll be in a better position to comment. But as far as we are concerned, we are ready. We have capacities. We have a product which is already available in many markets, including Europe and Canada. And we are quite confident that over a period of time, this can be an important growth driver. I mean, of course, in biosimilars, the market penetration does take time, unlike in pure play generics. But in the coming years, we definitely think that US would contribute a significant revenue for biosimilar Aspart for us.
Right, Siddharth, I'll get to Yesintek in just a bit, but with all of these launches that are in place, the timelines that are in place, how does all of this add up to your margin profile? What do you expect to end the year with? And what's your outlook for FY26?
I don't expect a fundamental shift in margins in the coming quarters because you do have a positive margin contribution from some of the new launches, but the existing base, if you look at, it's a $2 billion top line that we have. The existing base does have pricing pressure or the price erosion that happens. So some of the launches and the contribution from these launches would be offset by the erosion in the existing business. But of course, we might have some key launches which might contribute significantly in a short period of time, especially if there is a limited competition. But again, fundamentally, over a short to mid term, I would not guide for any significant margin expansion.
All right, we take that point. So just to wrap things up, from an overall company perspective, you gave us a sense of mid to high teens sort of growth in your biosimilars business in the next year. From the overall business perspective, what can we expect? You said that margins may hold at these levels and not see significant expansion given your investments in the business as well. So from a revenue and a revenue perspective from both your businesses, what can we expect on an overall basis?
I think, again, something which is what we have said, that all three of our businesses are very well positioned, whether it's in biosimilars with the new launches coming up, whether it's in generics with the GLP-1 play, or whether it's Syngene with a huge opportunity which is there, which China Plus One, or with the Biosecure Act, and an opportunity to play a wider role in the contract manufacturing. I think all three businesses are very well positioned for growth in mid to long term. And from a guidance perspective, I think we have indicated that definitely we can look at overall levels, high mid-teens kind of revenue growth in the coming years. And of course, a bit of it could be lumpy in some quarters. We might see a higher growth in some quarters, depending on the tender outcomes and the deliveries. But strategically, we are very well positioned at a group level to deliver a mid-teen or higher than mid-teen kind of growth.
Higher than mid-teens kind of growth. It's optimistic. So the street lights what you're saying. Siddharth, thank you so much for sparing time and joining us today this afternoon. Wish you good luck for the rest of the year as well. That was the management there of Biocon. The stock seeing a slight recovery from the lows of the day. We take a short break from pharma. We shift to real estate on the other side, and Ghulam Zia of Knight Frank will be joining us to decode the key trends in the Mumbai real estate sector. Stay tuned.
Gross NPA of the lenders increased by more than 32% in H2 FY24 versus H1 FY24. This compares to a decline of 32.5% in H2 FY23 when compared to H1 FY23. We had highlighted in May of 2024 that rural market has come under stress. Q1 FY25 showed further deterioration in their asset quality. So from May of 2024 to now, most of the lenders have given negative returns versus positive return that you are seeing on Nifty.
But on to our series of year-enders, and we are putting the spotlight today on the microfinance sector, and it witnessed pain in this year, and that is expected to continue in 2025 as well.
Welcome back. You're watching us here on Halftime Report. While we're talking about, the markets at large, let's look at the property markets as well. Mumbai recorded over 11,500 property sale registrations in February as per a Knight Frank report. Remember, registration for properties worth more than 5 crore rupees have surged 15% as well. To discuss this and more, we have Ghulam Zia, who's a Senior Executive Director at Knight Frank India, joining in. If you look at the kind of registrations that were there before, etc. as well. Ghulam, the question is, what's the prognosis from here? Do you think it's likely to slow down from current levels, largely because of, one, the higher base, and secondly, because the wealth effect that may be taking place in this market because of the decline that we've seen in equity markets? Just trying to understand the prognosis from a real estate standpoint.
Well, there are 2-3 different ways of looking at these numbers. First of all, yes, the numbers you're showing is actually updated, because by the time the February ended, we have seen more than 12,000 numbers in this February as well. The number that we had shared with you was a day prior, just about morning of 28th. And then we did see a good closure. And that was actually for a per day rate of more than 430 units. February happens to be a smaller month. numbers are also increasing month on month. So it is something where we are not yet completely sure. While a lot of them are already trying to paint a very bleak picture for real estate sector, but at least Mumbai registration numbers are not showing any letdown or any kind of a shrinkage yet. We have to wait. So what you're talking about, the impact on wealth creation, etc., is obviously there to be seen. Of course, the largest segment of affordable housing or the lower housing, which was mid to lower end of housing, has seen severe damage, has been shrinking. But the upper end continues to do more transactions. In fact, even in the month of February, we have seen more than 5 crore apartments selling, much better than the previous 2-3 years of February, and overall month-on-month improvement as well. So it's a bit too soon for us to draw that conclusion that there is a slowdown in the market. At least Mumbai numbers are not showing it. If you expand it to other markets, you may hear about a few of the markets actually showing some amount of slowdown, but at least Mumbai market is not yet showing any slowdown in spite of the indicators that you're talking about, whether slowdown in stock exchange or other wealth creation measures, global issues, etc. But whatever said and done, Mumbai numbers are continuing to be where they were for last almost about 2.5 years, which is just inching up. While it is kind of flattish, but still there is no sign of any crack yet.
Ghulam, good afternoon. Thank you for joining in. You're seeing no signs of any let-off, at least on the premium housing side. But what about affordable housing? Because just to mention, I was having a conversation with a friend yesterday and he was mentioning that the monthly rent for a 1 BHK in a suburb like Vileparle is around 60,000 rupees. So what is the demand side looking like on the affordable housing space? You mentioned in the previous interactions that it's not looking very good as compared to the premium housing. Has that changed?
So here are two aspects I would love to bring out, since you're talking about these two which are not really connected to each other. First of all, the affordable housing market of Mumbai. In fact, this was one market which, and surprisingly enough, when you talk about pan-India top 7-8 top cities of the country, Mumbai is one market where affordable housing, which was below 1 crore, even below 50 lakh, was selling the maximum in terms of absolute numbers. Of course, it's a large market with a lot of smaller satellite cities and towns all around India and MMR region. But that said, even in Mumbai, the share of that segment is actually shrinking much faster. It is barely 25 odd percent, which used to be 29%, almost 20% shrinkage we are looking at as far as that segment is concerned, and which is then compensated by mid to upper end. But that segment itself is under serious concern because transactions are slowing down. On the other side, new launches in that segment have also been shrinking a lot. Now, the other aspect that you're trying to talk about is increasing rents. Well, rent increase, especially in Mumbai market, is more because of the redevelopment projects that have been launched in last year and a half or two. Every such project where a developer takes up a redevelopment of a society, the people who have been living there earlier would immediately scout for properties on rent for 2 years, 3 years, 4 years, as long as the developer takes to rebuild that complex. And that is why the demand for rental housing has shot up a lot. In last 2.5, 3 years, pretty much every society is considering redevelopment. Anything which is more than 25, 30 years old is coming on the block. And that is the reason behind the rental housing demand shooting up a lot. And that is directly showing the rent of such properties shooting up.
Right. Ghulam, typically we call you on the report that you've written. This one's on Mumbai registration. But we can't let you go without your perspective on real estate in general in the country itself, and any sort of outlooks that you're getting from commercial and, mall real estate as well. In the recent, commentary that we've heard from everyone, consumer sentiment has been fairly low. You yourself were among the first few to put out the report saying that the mall vacancy has been the highest that we've seen in India, ghost malls, etc. Have you seen any signs of, high frequency data that suggest any sort of improvement, or do you think it's stagnant at best and declining at worst?
Well, first starting with retail, the malls that you're talking about, there, in a very short answer, it is stagnant. It is not really deteriorating at all. It is going to be the same for next couple of months or couple of quarters for sure. But on the other side, office sector is improving, as we have spoken earlier as well. The story in commercial real estate, the office sector, is starkly different than compared to what is happening globally. So in India, the office space demand has been shooting up. And that continues. Like when we last did this report was December of 2024, there was a marked improvement, almost about 70 plus odd million square feet of office space absorbed in the last calendar year, which was historic best. And that continues. Even in the early month, January and February, we are not looking at any slowdown as far as the office market is concerned. So overall, if you look at the broad perspective of residential, office and commercial is going stable. Retail is going stable. Offices are actually still looking up. And residential, of course, while we started with just Mumbai, but there are signs of worry all over. But the numbers of residential transaction in Mumbai is not yet showing any slowdown. So that's the overall perspective of real estate in India.
The residential market in Mumbai is not showing any signs of slowdown.
But the bigger point was that he said that there are signs of worry in residential demand across the country. So that's something that we'll most definitely need to keep an eye out on.
Indeed. So keep an eye out on all of these developments within the space. Ghulam, thanks a lot for sparing time and joining us this afternoon. We take a short break here on Halftime Report, shifting focus back to the markets. The Nifty has seen some bit of recovery from the lows of the day. Sudeep Shah of SBI Securities joins in on the other side for a quick chart check. Stay tuned.
Welcome back. There has been some recovery from the lows for the frontline index, and that sets up perfectly for the FNO setup at midday itself on Halftime Report. If you look at the Nifty now, comfortably above the 22,050 mark. At one point, it was threatening to break that 22,000 mark itself. The Midcap Index is something that is falling a lot more. The Nifty Bank is the one which is underperforming today. The Nifty IT is outperforming, quite the reverse of what took place on Friday itself. The broader market pain still continues. The Midcap Index down about 1.5%. The small cap index is down about 2% as well. Let's get to levels. The 22,000 put on the Nifty is extremely crucial. There is a fair amount of open interest. These are options that expire on Thursday itself. Premium of 91 rupees, telling you that 21,900 and 22,000 psychologically very important. Though on the way up, how much can this recovery sustain is the big question, largely because 22,100 call writers are fairly active at around 110. Put writing is limited. Call writing is fair amount, which is taking place in the market, which is telling you why the put call ratio has dropped to 0.73 versus 0.78 in the first half of trade itself. And typically the put call ratio actually bottoms out at around that 0.65 to 0.7 mark itself. 22,000, we just spoke about that. Why is it extremely crucial? Because the last time Nifty was below 22,000, even on an intraday basis, was June 5th. Remember, June 4th and 5th, we had the election result related moves that came by, the general election result. And as a result of which, these are crucial support levels to watch out for our market as well. And since that time, since last time the Nifty broke 22,000, there has been a lot of underlying changes in the index. The realty stocks, the PSU index and the auto index have been extreme underperformers, down 16 to 21%, even as the Nifty flattened at around that 22,000 mark over the last 1 year. IT and financials are holding up. The broader market pain evident. 8% decline in the mid-cap index, 12.5% decline in the small cap index. A lot of individual stocks losing a lot more than what the index would suggest. So from the Nifty pack itself, you have IndusInd Bank, Hero MotoCorp, both of them down about 36% from the top. Adani Enterprises, Tata Motors, Asian Paints, all of them down between 30 to 34% as well. I said the two sectors that were doing well were IT and financials. Even the gains, Shriram Finance up 30%, Bajaj Finance up 24%, Wipro and Infosys up 25% since June 5th. 2024, the last time the Nifty broke that 22,000 mark itself. The broader markets, the pain is a lot real. We have Adani Green, which is down nearly 60%, Titagar, Concor, both of them down 40%, ABB down 37%, Whirlpool itself, parents selling some stake, not being interested in the India business as much, has taken that stock down by 41%. But despite the correction that we've seen from the top on a lot of these names, they still continue to hold with big gains. BSE is one of them, up 66% in the last 8 or 9 months. Persistent Systems up 44%, Dixon Tech, Coforge, MCX, all of them up between 30 to 40% as well. All said and done, a lot of stocks in focus. More importantly, 22,000 on the Nifty, an important level, largely because the last time we went there was June 5th, 2024.
Almost giving up all the gains that we made since then. Manglam, thank you for that FNO update. And Sudeep Shah of SBI Securities is joining us now for a quick chart check. Sudeep, good afternoon. Thank you for joining in. We from 22,800, we came to 22,500. Now 22,000 is that level to watch, right? How long can the index sustain that level? What if we go below that? And couple that up, of course, with your stock recommendations for the afternoon.
Good afternoon, Hormaz. Hormaz, I feel with the current trend being broadly negative now, we've seen Nifty having 5 consecutive months of negative closings, and more than that, the broader markets are in a deeper pain. So we feel right now, after all this gloom and doom, Nifty is approaching an important support zone, which is closer to 21,900, 21,950 zone. And why this is an important support zone? Because this is a 100-week exponential moving average, as well as 38.2% Fibonacci retracement of that entire rally from 15,200 to 26,300. So that makes this zone of 21,900, 21,950 all the more important. So I feel till the time this zone is guarded, after this last several weeks of battering, there could be some pullback into the markets, and that pullback can be up to 22,400, 22,450, where the next level of resistance would creep in. So we feel that from the current levels, there could be some relief rally coming in. 21,900 is the key support.
What about specific stocks then, Sudeep?
There are a couple of stocks that we like. The first one is Blue Star. Now here we are seeing some kind of a decent up move today. There was a consolidation that was happening in the last several sessions. And from the current levels, we feel that the stock could head up to 2,200, 2,250, and this can be bought with a 1,950 as a stop loss. If we see the overall structure of the chart since last several months, even in the current downfall also, the stock has relatively outperformed, and in the first signs of a recovery today, we are seeing a fair bit of buying in this stock. So we feel this could be bought from a medium-term perspective. The second stock that we feel is kind of bottoming out, or there is some kind of a bottom formation visible, is Cummins India. Last 4 or 5 weeks, we are seeing some kind of a bottom getting formed closer to 2650, 2700 zone. And today also, we feel from the lower zones, there is some kind of a decent support coming in for the stock. So an important Fibonacci retracement has also been done with. So from the current levels, I feel this could be bought with a 2730 as a stop loss on the downside, with a target of 2900, 2920 on the upside.
All right, Sudeep, thank you so much for sparing time joining us with your views on the index and on specific stocks as well. Blue Star was one of Sudeep's picks, and the early summer onset is reflecting on both of these names, Blue Star as well as Voltas. Both of them are bucking the trend in today's session. Take a short break. More on the markets on the other side. Stay tuned. Welcome back. The Nifty is almost up 70 points from the lows of the day, nearing that mark of 22,100. But on to auto sales, then TVS, Eicher, M&M are in the green after their sales data for the month of February. Sudarshan is here with more details on that. Sudarshan.
So in the auto sector, where most of the companies have disappointed on the sales front for the month of February, 3 companies that have outperformed are first Eicher Motors. Now, why the company has outperformed and why the stock is in the green? So majorly, Royal Enfield has 2 major segments, that is up to 350cc and more than 350cc. Now, both the segments have seen a healthy growth. For up to 350cc, the growth is 17%, and for more than 350cc, the growth was healthy at 33%. And that's the reason it might help margin as well, because the growth has been more than more for the higher segment of the bike. Now the next is TVS Motor. So if you look at the Bajaj Auto numbers, where export has seen a minor growth of 1%, now for TVS Motor, export has seen a growth of 33%, and that's one of the major reasons why TVS Motor has managed to beat the estimates, where total sales were up 10% and domestic sales have seen a minor growth of 3%. And domestic sales are a drag for most of the companies. Now another company is M&M, where both auto segment and tractor segment numbers are higher than estimates. Why the number is higher than estimates for auto segment? Because of the strong demand for SUV, where M&M remains the leader, and SUV segment has seen a growth of 19%. And for tractor, everyone has been saying that there is a recovery in the rural demand, and that's the reason you have seen a growth in tractor sales, where sales have come in 18% higher. So where Bajaj Auto, Hero MotoCorp, Maruti, all these stocks are under pressure, these three stocks are higher because of numbers better than estimates for the month of February.
You do better than expectations. Your street rewards you even in a wobbly market. But speaking about wobbly market, we've actually seen a fair amount of recovery. The Nifty is just about going into green right now, sitting with a cut of just 32 points. So that's a fair amount of recovery from the lows. What's leading this recovery is the IT pack and metals index as well, which is actually, moved off lows swiftly. So keep an eye out on all of that. We'll step into a short break. As we do that, let's give you the good news. The viewers, India's business news leader is now just a click away. This is CNBC TV18's all-new app, where you can get instant access to breaking news, in-depth articles, all updates from the financial worlds at your fingertips itself. You can download the CNBC TV18 app from either the Apple Store or the Google Play Store, or just put on the camera, scan the QR code, which is there for you on the screen. That will redirect you to a link that will get you this app, which will get you everything at your fingertips.
Welcome back. 22,100 now on the index. The question is whether that will sustain, as Manglam was mentioning earlier as well. The 22,100 call writers are very active in today's trading session. So it's been a very swift recovery from the lows of the day, almost over 100 points now on the index. And as we speak, the index has slipped into the green now. As for the day, we started gap up, we moved lower, and now we are back in the greens. It'll be interesting to see whether these levels hold off or not. A couple of high-flying PSU names that I wanted to highlight. IRFC is one of them. That stock is down 50% from its peak, and as is Ireda. At one point, the stock was down almost 9% in today's trading session. That too has seen a slight recovery from the lows of the day, still holding on to losses of around 5.5–6%, but Ireda too is down 50% from its peak. Take a short break. On the other side, we get to an exclusive conversation with Vincent Clerk of Maersk. Stay tuned, we'll be right back. Welcome back. Some important flashes on your screen. The February Naukri Jobspeak Index is now at a multi-month high. It's up 4% it's up 13% on a year-on-year basis at 2890 from 2780 last year and 2550 last month. 10 out of the 16 sectors have registered growth. 5 of them have seen a decline, and the IT sector has seen a sharp uptick from the January levels, and that possibly is also a reason why the IT stocks are started to recover from the day's lows, and also reflecting on the recovery on the Nifty as well. Now 22,150 is where the index is, almost 150-point recovery from the lows of the day. The IT index holding on to its gains as well. So macroeconomic indicators falling into place. Ramdev Agrawal was also mentioning about this just a few minutes earlier. So things starting to fall into place possibly for the Indian economy. But moving on then, Maersk has named its 11th dual fuel methanol vessel Albert Maersk in Mumbai. Manisha Gupta spoke to Vincent Clerk, the global CEO of the company, and he also discussed how India fits into the overall scheme and the significance of holding a naming ceremony for his vessel in India.
Well, I think in general, if you look at the world economy in general, there's a lot of uncertainties. There is a lot of also areas that are slowing down compared to what we have seen over the past few decades. And you have a bright spot. And this bright spot is India. That has really hit a stride, and where we're seeing an acceleration of the growth, an acceleration of the development. And of course, for a company like Maersk, it is important to signify in a very symbolic but very powerful way our commitment to playing our part in bringing that transformation about.
Since we are talking about India, Vincent, you also pledged $5 billion in coming few years. How do you look at this investment, in what areas, and how much time frame?
So I think what is really important for us is to look at how we can support the development of India, and what does India need where we have capabilities that are differentiating. We know how to develop ports and operate ports. We know how to develop and operate warehouses, inland infrastructure. We know how to develop also. We have a large technology base here that we're going to continue to increase. But if you look at the $5 billion, the lion's share of it is going to go to terminal infrastructure and inland logistics infrastructure to support the growth that there is in this country.
You already are here at JNPT, and then there's conversation about you expanding your infrastructure at Pipavav as well. So what ports are you really looking at?
Well, there's going to be a need for more. At the clip at which the economy is growing here, this is not going to be sufficient. There is a large project going on right now in Vadavan that we feel is interesting. There is other projects along the coast here, but there is also projects in the rest of India on the eastern coast of India, where also there is a need to develop more infrastructure than what we have today. So we'll have to look at the different areas and places, look at how the processes go, of course, and wherever we can make a difference, then we stand ready to play and make that difference.
Vincent, you also, the company that is also has met the Indian Prime Minister, and there has been a talk about alliance, Green Fuel Alliance, that is. What does it really mean, and what is the time frame and roadmap here?
Well, I think there is a great alignment between our goal for decarbonizing our operation and the vision that there is for India becoming a powerhouse in the new world of green energies. And I think that for us, making these two agendas meet in a powerful way, and again, playing our part in bringing this about while also serving what we want to do for the world, what we want to do for our customers, makes a lot of sense. So I think it was very powerful yesterday that we could agree on moving in that direction with Prime Minister Modi, and we look forward to continuing that conversation and actually bringing it into facts.
Yeah. Talk about this ship now, Albert. This has been named, and naming ceremonies are usually, when it comes to maritime and shipping companies, big deal, and I saw that one today. How important is this ship? This is one of its kind. This is going to be running on complete green fuel. Tell us more about this one.
Well, I think always the name giving within the maritime sector, within our industry, is really big. This is the time where you actually come and hope with the Godmother really give it a blessing and wish it, safe sailings and prosperity and so on. So it's a really, really important symbolic event. It is especially symbolic because it is the first time that it happens in India. Ever. We've been here for over 100 years and have never had such an event. So from that perspective, it's very important. But it is important also because it is a different design. It is a different technology. It is a real beacon of hope and a symbol of that it's not just words, but the future is actually coming, and this is how it looks.
This is one of the green fuel ships that you have. So what is the number right now, and what really is the plan going forward?
So this is the 9th ship that we have joining, and they will continue to come. In the same series, we have 26 ships on order, so there will be more of those coming during the rest of this year and next year. And we have other series that are following that in the coming years. So this is part of our fleet renewal program to make sure that the network that we have remains the most competitive network out there, but also a network that enables us to reach the decarbonization goal that we've put forward.
Vincent, it also is going to be about availability of green fuel. As of now, we do understand that China is your major source for that. But is India giving you those kind of numbers? What are the kind of conversations that you have in India for this?
Yeah, so the markets for green fuels, and especially the supply of green fuel, is still emerging markets. And it is true that so far, a few Chinese projects have gone faster than what we have seen elsewhere in the world, and that's why so far the contracts that we have signed are mostly in China. But we're actively looking for diversification of sourcing, because a lot of our ships do not call China. A lot of our ships, like Albert Maersk, will be sailing between India and Europe, and so it is important for us to find sources of energy, either in India or on the way between India and Europe. And there is a lot of really promising projects here. But we need to really, I think, encourage the development. It takes some risks to be the first ones to have a big project come online. We need a lot of that green fuel to power this ship and its sisters. So there is a scale element in that. But again, this is a dialogue that we're having with different projects here in India, and we're looking forward to hopefully seeing one of them come into a real business and signing a contract and having the first step in this diversification.